Hey, everybody, good afternoon, or good evening, good morning, wherever you are. This is Doc Severson with 12-Minute Trading. I'm joined by Dave Lukas here of 12-Minute Trading as well, too. Today is Monday, the 13th of October. And what me worry? What crash? We had this crazy crash on Friday, and it makes total sense because the market was so apathetic. If you
hmm
noticed, everything was just, the volatility had come out of the market. Market didn't care about the shutdown, didn't care about anything. And everybody, I wouldn't say we got into euphoria just yet, but it was certainly
No.
apathetic. And all of a sudden, this is what we call the exogenous risk. It's like
Yeah.
somebody threw a boulder into a quiet pond and you got ripples all over the place. Nobody expected that. So,
Yep.
there we go. But now, like who else could not only cause the crash but also make it go away within the period of 48 hours? It's like
hmm
this is today's market. This is just
Yep.
what we have. Dave, what are you seeing out there, man?
Yeah, I mean, anytime you have a complacent market like that and you introduce uncertainty in it, you get these reactions, right? And I told my students on the weekend, I said, look, that's normal. And we were at a point where, everybody has been saying this market hasn't corrected, it hasn't pulled back even 2, 3% in months, and it's due and everything else. So people jumped on, they exacerbated the move on Friday. And as we have seen, these things typically resolve themselves very quickly, right? There's a difference between a policy driven event and a structural driven event. Structural things are like, oh, we're going from ZERP over 10 years to now raising and jacking rates up higher. That is a structural thing that has a huge impact on the markets and how they move and all that stuff, right? And now we're going back the other way. But you have policy-driven things that come up, which was like what we saw in the spring, and yeah, it was nasty, but look how fast it was over, right? Structural things last a lot longer. Policy-driven typically resolve themselves. And so already the things were getting hedged after the hours on Friday, and so then over the weekend we saw the announcements, hey, don't worry about China, everything's gonna be fine. And so we're getting that relief rally off of that today, but we're not back to the same place that we were. So that's the key thing now. We've had that little bit of a corrective move. We have washed out a lot of people in one day that had a lot of leverage. So we've definitely taken those out. So now is it time for the big boys to step in and just run this thing into euphoria. And that's where I'm leaning. I think the things are setting up for that. And then all bets are off. The whole thing's going to fall apart, probably. But that's usually what happens. So, that's how I'm seeing. I think fourth quarter is going to continue to be good unless we have more exogenous risk that comes out of nowhere, right? So between now and November 1st, there could be some more announcements. But it looks like this thing is getting kind of put to rest, and we're back to maybe that quiet and trending type market.
So to me, what is going to be the biggest indicator, the biggest tell for this market is I find that when something usually comes along to spook the market, what happens is people's mindset shifts to being very defensive all of a sudden. Obviously, right? Because fear is, when you're in fear, all you can focus on is that
It's
you're
like
worried
tunnel
about.
vision, right?
Yeah, it's exactly right. You can't see any opportunity around you. It's like just fear. And what happens is usually when we get into situations like that, it's almost like threes. Like there'll be the first event comes along and then all of a sudden something else happens. Like, oh
Mhm.
no, this can't be worse. And then a third thing will come along. And then people are like, hey, I can't handle this. And then that's where the flush really happens. So to me, what happens is we got the first piece of bad news on Friday, which has
Mhm.
already been sort of canceled out. But if we get a second piece of bad news anytime soon, like maybe,
Yep.
oh, the shutdown's going to go along for the next 3 months or something like that, or some other piece, usually it's
No, it
something
would
that's
have to
not
be.
priced in.
It's not even a shutdown. It would have to be something along U.S.-China relations or
Yeah.
this thing escalating. That it would have to be that.
Or
The market,
some other
yeah,
piece, something to do with Russia that we've forgotten about, or
yeah,
it's usually something that nobody has on their mind at all, and nobody had
mhm,
this on their mind on Friday. But
exactly.
if that piece comes in anytime soon, and the market does not dump based on that, then we know
hmm
we're good pretty much for the
Yep,
next few weeks until the next big thing comes along.
right.
but that's usually what I've seen is like news comes in threes like that. You get one
Yep.
thing after another, and then it becomes an avalanche. This the same thing happened with back in 2008. We had all of a sudden, Bear Stearns started it off, and then we had Lehman
Right.
Brothers going, and then once the Lehman Brothers thing went, all of a sudden
Then
everything was
people
bad
paid
news.
attention. Yeah.
Everything was bad news, and it was just
Remember,
like
Bear
one thing
Stearns was
after another.
months ahead of that,
Yeah, it was in
so
March. It was in March,
yeah.
and it kind of set the tone for a number of months. People
Hmm.
are like, "Okay, are we all right?" No, we're not. So,
Hmm.
but yeah, Dave and I sort of agree that there's a very good case that we're gonna, irrespective of what happens in the short term, we'll probably
Yeah.
end up printing new highs before the end of the
Yeah.
year, which will
We
be,
already
I
got
think,
some
a
questions
surprise to
coming.
a lot of
We
people.
actually already have questions coming in before we get to the chart, so we'll answer those real quick. Brewhead, awesome. Yes, took advantage of that drop and got those shares already up. Sell a covered call on it, making yourself even more. So that's awesome. We've been playing the wheel on these IBITs and the ETH and those stocks and been talking about that. That's awesome. Um, you know, Gold is an interesting thing. Do you mind pull up a chart of gold, Doc? Let's look at this thing because it's going bonkers again today. And it's unrelenting. Look at the weekly chart. Look how far outside and throw the Bollinger Bands on because it's like it's decided that hey, there is no such thing as Bollinger Bands anymore. And it just wants to I guess just ride outside of them for the foreseeable future. So let's talk about this real quick because this is something I think a little bit there's more here to it than just gold is going, parabolic to the upside here. Um, so if you look at the weekly, throw some Bollinger Bands on. And we
Yeah,
called this move. We nailed this move, guys. Made a lot of money off this move. Um, but yeah, we'll throw those on there. And then the thing that you see is like, I don't know even how many weeks we're outside on the Bollinger Bands now. Um, yeah, looking
one,
at those
two,
things.
three, 4, 5, 6, 7. This is the seventh week outside from that squeeze. We had that squeeze, and we're now
Yep.
7 weeks above.
And that's a weekly chart. That's not a daily chart. Like daily chart, you can see like 7 days like that, and then usually you get a move like like we saw Friday, and it brings it back in on a daily chart. But to 7 weeks outside, you can look like even historically, back to where Doc's got that one line in there. Back then you wrote it, and above it, but not like this. So there is and we've talked about this before. Gold has been reclassified as a tier one asset. It is now on the same par as the dollar and like US bonds and treasuries. And so this is a change. This is a structural change in the sense that banks around the world now can hold gold just like, and it's at the same equivalent of dollars and everything. So you don't necessarily have to buy US debt. You can hold gold instead. And if you think about it, billions of dollars in gold, right, versus billions of dollars from if I want to store that somewhere, right, is not it's actually a small pallet, if you will. And the thing is there's 10 to trillion 10, or sorry 10 to 12 trillion dollars of US debt owned by these central banks around the world, and they've only moved like 3 to 400 billion of it into gold. That's what's fueling this move. So what happens if they take 20% of their money and put it in gold? Right? Where does that put us? It's like $10,000, on an ounce on gold, right? So there is the potential for a lot of runway here for gold. So, and this is also you're seeing people pile in. GLD is a little different because they don't actually really own it. It's kind of a I don't want to get into GLD, but just it's something, trade it, be careful with it. But the banks can keep buying here, but there will be a time, and this happened in the 70s, where we got a move like this in gold. And back then it was like it went to like 180 bucks an ounce, and that was a huge deal, right? It was like a 5 6x from like 30 some dollars an ounce. But banks like got their fill and they had enough in their coffers and they said, hey, we don't need to hold more, so they started to slow down, and then gold dropped. It dropped to like 100 or 90 from there, but then it skyrocketed to like 800 over the rest of the decade. So there's precedence for like at some point these banks are going to slow down and this gold chart's going to correct. That is going to be a great opportunity because most likely it's going to turn around and run even higher from there. But there's a long runway if these guys want to move more of their dollars, more of their bonds that they're holding and shift that to gold. So it's really hard to say to sell a call spread on it right now. It seems like the easiest thing to do is just sell put spreads until it proves you wrong, right? Call spreads, I was talking with one of our mastermind students a week or two ago, and they had just done a call spread and it got run over, even with the exhaustion. It's like, you know what, we'll just shift to put spreads for now until this thing, changes that character and really has that big corrective action. So, yeah.
I mean, this is one of the biggest losses that I took as an investor was relatively early on in my career when I took a stance saying, well, there's no way that this can keep on happening. So therefore, I'm going to stand in front of this. It's almost like,
Mhm.
standing on the train tracks and seeing that big light going and say, well,
Right.
stop. He's not going to hit me, and guess what he did? So yeah, just finding a way to get in, get behind it. I mean, it's not a bad thing to just trade with a trend, but
At
as
some
as
point,
is,
you'll get the corrective move.
you'll get the
It'll happen.
corrective move. Yeah.
you know and then that's when you can start to like what I would love to see is gold kind of get to that point where it starts to flag again because I think that's what's going to happen ultimately. It's going to finish this up and then kind of flag right for a while, and it may be like it just did for months on the weekly chart. That is like the perfect time to just condor that thing up, you know and just cycle on it. So that's what I would be looking for. All right, with
Worst
so hey,
sentence I've
yeah.
ever uttered.
So now we can look at the charts, right? So I think it is important to look at like the SPX, especially in the context of this, because we've had a few moves. It didn't happen in one day, it happened over a couple days during this run where we've gone down to the lower Bollinger Band on the daily chart, bounced back up over and continued the trend. So something that is, I think, important to note. Like this is, on the daily chart, these moves down. You can see that we've had a couple over the last few months, even back to look at August. That was a move similar to this. It happened over the span of 2 days, right? And then rallied to new highs. So for me, that's the key now. Can this thing get back up to where it was, or do we get close and then roll over? That's kind of what I'm watching.
The other thing too, which I thought was good, is that let me bring my pen up here.
Mhm.
Is that we got uh, the weekly chart was in danger of falling into exhaustion. Now we do have the
Mhm.
monthly chart in pretty bad shape down here, and this is very similar to what we saw last year when we saw a lot of shake and bake, a lot of big candles, a lot of big monthly moves that we had from last year. I mean, if you look at the weekly chart from last year, you can see some of these moves here. I mean, this was a 10% move or very close to it.
In
That,
1 month.
yeah, that we had in the span of, 3 to 4 weeks. That was pretty significant. And then, of course, it hits new highs after that. So, you know, could we pop up to a lower high and then, another piece of information comes out? Certainly could. And if that happens, we're going to see the monthly chart energy come back up again. We're also going to see the weekly chart energy come back up. You know what? Somebody told me a long time ago is that the news often is generated to fit what the market wants. And it's
Mhm.
almost that's almost true. It's almost like when you get into situations like this where you have monthly exhaustion down here at a level of 25, which is where it was on Friday before the move. We were banging on the table saying, "Hey, we're about to get a big move here." It's along comes a perfectly timed data point. In this case, it was a tweet that generates the volatility that we'll probably see for a few weeks yet, and is going to cure this thing. But looking at the weekly chart and the daily chart, they're ready to go. I mean, we can easily hit 6,800 on the way back up here.
Mhm.
Before this, we'll need to take a break again. So 7,000 by year end is easily available with the expected volatility that I would see. So we've been very quiet lately, very quiet. But what I would expect to see is stuff like this coming up in the near future because things have been so quiet, and quiet always leads into sideways and volatile. So while I think predicting the direction is a fool's errand, I think we can see that the volatility will increase going into year end. And
Yeah,
so
there's
that I think that's an
usually
easy call.
yeah, there's usually big moves lower don't usually start with like what we saw Friday. They got to get everybody back on board. So it cleaned out a lot of the leverage positions and people on Friday, and then the buyers stepped in, the big boys stepped in. In fact, you saw it Friday night. You saw Bitcoin like come all the way down to like almost 100,000, and then BlackRock and everybody stepped in and ran that thing back up to 112, 114.
Oh, look at do
And
you see
that's
this crazy one here? This is XRP went down to $1,
yeah,
and that happened all in the span of just a few minutes.
yep,
It was here's a
so
12-minute candle. This is all one 12-minute candle, and so
crazy,
I was telling people on my service like don't look at this and get mad at yourself because it's literally impossible to get on board with one of these moves.
right?
It's like you have to literally hit a market order and then you don't know where you're going to get filled in the
Yeah.
queue. I saw like Coinbase was way behind. I did a
Mhm.
I did a market buy on Friday night with Coinbase, and I didn't get
Mhm.
any kind of reporting on that for hours
Yeah.
afterwards. And I didn't know if like the money like disappeared on me and stuff. So
Hmm.
don't look at these moves and get too upset. Like, oh, I could have, would have, should have, because it's so hard to do that. I had the same thing happen in the flash crash in 2010. Was I saw the move on the way back down and I tried to buy on the way back up, and a lot of those buys were nulled out. They
Yep.
canceled them out after the fact. I don't know why, but volatility like this will happen. Now, there's a question here as to why, why does
Why is IBIT down and ETH up today? I was looking at that too. I didn't know if IBIT did a maybe a special dividend or anything. It doesn't look like it. So I'm not
no,
sure
there's
today
there's no
actually.
dividends on that.
Yeah.
It's just a matter. It's opportunity right now. I mean, right now, ETH got hit harder than
Mm-hmm.
Bitcoin, so there's a perception of it's more discounted right now, a little bit more opportunity, and ETH has been hot lately anyway
Mm-hmm.
for that reason. Um, so that's a crypto term called the flippening. Whenever Ethereum gets to be more popular or gets to be a more desired asset than Bitcoin, that would be the flippening. I have not seen that happen yet,
Mm-hmm.
but we did have some periods during this year, especially during the summer, where Ethereum was on a tear. So the question right now is this the next opportunity for the next tear? Do we have BlackRock jumping in
Yep.
on this one once again and buying on behalf? So let's see, Frisky and Tony, do you think with S&P 500 volatility, the end of the BTC cycle coming to the end, Ethereum should go up though?
I don't think we're there yet on the BTC cycle.
No, we're not there just yet. I think we still got maybe a few months left. I mean, what I'm looking at here is my measured move target. Yeah, everything is based on in my world, everything is based on the volatility transitions. So right now, looking at the weekly chart, it's still pretty quiet.
Mm-hmm.
And before you get a bearish transition, you always get this crazy volatility sets up. So quiet markets move to louder, more unstable markets, and then sometimes those actually move to the downside. So this was a hell of a pullback here. Um, but all of this came from leverage. It was so over
Mm-hmm.
leveraged. So we don't really have the transition to volatility yet. Maybe it's just beginning with Friday. But if it's just beginning, we'll probably end up with new highs. And I'm still looking for my next target being 145. So we'll see if it
Yeah.
hits or not. I don't know. That's again, I'm not predicting that. It's just a measured move target based on a pattern.
Just remember how these things work, guys. Again, we talked about it before. Actually, pull up the S&P chart. We can look at just a, you know, 1 year chart or something on it. But the four phases of the market. We drum this in you guys' heads. I know you guys have heard it before, but disgust, disbelief, acceptance, euphoria. And disgust was in April and the spring, you know, then it rallied in disbelief, got back to where it was. Then people accepted it and it's continued. We're in acceptance. Euphoria is the parabolic tail at the end where it like turns and just, goes straight up at the end. And a move like this, like what we've seen, over the last few days, typically is what fuels that. It shakes people out, and then all of a sudden, big boys jump in, and then all this money that's on the sideline says it's time, and it gets in and it runs that thing up and goes parabolic, and then it typically falls apart. And that's why I say I wouldn't be surprised to see that through the end of the year. And then once that happens, sit on the sidelines for a little bit. If it gets, the charts will get noisy, if you will. Doc, you can show an example of that.
Yeah, I mean, we saw this transition. Probably the best one that you can look at is the transition at the end of 17, beginning of 18, where it went absolutely nuts, and then it
Hmm.
got noisy, right? And it stayed noisy for a while, and then we actually resolved back to the upside from there. And then here's the COVID thing, which is a little bit different. But from the COVID thing, we did the same kind of thing. Then it got noisy, and then that's when things started to fall to pieces in
And that's
22.
also when you had a structural change.
Right. So markets will always respond to uncertainty by becoming a lot more unstable, and so that to me is a big tell. It's a big hint towards you can expect to see when markets get unstable, they don't normally just crash from the top. The only time we crash from the top is when there's some kind of exogenous or systemic risk that comes into the market, which nobody had priced in. So, COVID is probably one of the best examples of that. But if you go back and look at, and hopefully I have enough data here, if you go back and look at the great financial crisis, it was a very slow process. It was, we always say that, tops are a process. Notice how it got very loud and very noisy. And then it fell apart piece by piece. I remember back here where we had already dropped 20% or so, and then we resolved from there. The pundits on CNBC were always saying this is a baby bear. Oh, it's just a baby bear market. Hey, we're in good shape, and they were already prognosticating new highs from there. But then it started to fall apart more and more, and the worst selling always comes at the very end. So it it's a process. All of these. So the first thing, you get a quiet market, which transitions into noisy. It gets very noisy, very volatile, and then sometimes you get them. They will transition back to the upside from there, and that's what we saw in 2018. We transitioned back to the upside into 2019, but
And
most of
that's
the
because we didn't have a structural change.
right, right. So it was the threat of interest rates going higher, but actually Powell backed away from that, and that's why 2019 the prices went back up again. But this was obviously something, an exogenous event, where we had piece by piece the economy started to fall apart and affected earnings everywhere. So that's probably one of the best examples of showing how things just degrade over time. The
And that
volatility
was
ticks up.
that was structural because the underpinning, the
Mhm.
safe bonds and everything blew up. And so the whole structure of the financial markets was impacted. And that's what caused that, right? And then what did we didn't learn from it, right? Because we just monetized it all and basically
Yeah.
bailed it all out. And then, obviously we know where our debt's today. But then we went to ZERP and we did ZERP for a decade plus, and then that structural change, happened in the last few years. And we saw the bear that came with that and got through that. And then then we had a little policy one earlier this year, but the structure's changing back in favor for liquidity, right? So that's one of the reasons gold continues to go up. It's not just the banks, but it's also the fact that, you know, inflation is not what, the numbers you're seeing is, right? It's cumulative inflation. In fact, right now, if you made $100,000 in 2015, that has the equivalent buying power of about 75,000 today. So that's also what you're seeing in gold and in the markets,
Yeah,
right? So
yeah.
that's that's just
Notice this one.
assets are being priced in dollars, and dollars are going down. Dollars down 10% for this year.
Notice this one too. Here's 1999, where everything was just
Mhm.
going higher, higher, higher. Oh, notice also how noisy and how volatile
Look
everything
at the
got.
shot right there. Look at that one candle, and then look at the rally off of it before it got noisy. And like that's what I'm looking at. Like you could put that chart side by side to where the hard right edge today.
Yeah, this was
Um,
the long-term capital management. This was, something blew up. This was due to Russia and
mhm.
long-term capital management. I wasn't really that involved at this time. I was just
Yeah.
passively investing into tech stocks at the time, and I didn't notice anything. So, um, blessed, you know, blessed ignorance, I guess I could call it. And I was completely euphoric and bullish up at the top here, and I was surprised by people that were starting to get defensive, and I had a lot to learn. And
Yeah.
actually, this whole move that destroyed my managed account with Morgan Stanley uh, gave me the impetus and gave me the motivation to say, I'm going to learn this stuff myself because you guys suck. So, um, and hopefully you guys haven't also gone through the same process as that. Um, but in the end, it's healthy to go ahead and do it yourself.
Yeah, so what do we got, guys, happening here? I mean, we are earnings is kicking in this week and really getting in over the next few weeks, right? I think earnings are going to be good. There's nothing that happened Friday that changes earnings, right? So you have that kicking in. We've got a Fed that is lowering rates, which is basically giving more liquidity into the markets. We've got a lot of money that's been sitting on the sidelines that looks like it's starting to enter the market. And so all of that plus no major structural change, tells me that, until this thing proves me wrong, we're going back up. And so that's why I'm expecting to see that in the coming years. Plus fourth quarter seasonality. I mean, fourth quarter is usually a pretty good quarter too. So it's a lot of, checking the box there, right?
Yeah, I
Um,
like a 2 to 3% day is really no big deal in today's
yeah.
market. When we get a
No.
5% day, that may be the shot over the bow that announces
Hmm.
that every. But nevertheless, that move that we had on Friday, we're going to be feeling the results of that for weeks to come now.
Yeah.
So the volatility will tick up from that, and
Which
and
is
that,
great for us as option sellers.
right, and then we'll
So
see. Well, it's going to be mostly realized. I don't know how much. Well, today
implied.
we did have quite a bit of implied volatility, so
Yeah.
it was a pretty big expected move today. And
Cool.
let's see, have we actually exceeded
Yeah.
that expected move? No, we haven't. We've stayed within the expected move today.
Have we, is there any other questions out there, guys? I know we're kind of at the end of our time.
Yeah, so thank you everybody for your questions and for continuing to join us here. And if you are watching this on a replay, which is going to be most of you watching
Mhm.
this in the next day or two, if you have any questions that you want us to address next Monday, please shoot them in. Support at 12minutetrading.com, and we'll be happy to answer those.
Mhm.
All right,
Awesome.
everybody. Thanks very much. Have yourself a
Thank
great
you.
week, a great Monday, and we'll see you next week. Bye now.
Bye, guys.